This is Monday, November 20th, and it is early, for me at least. It's 6 a.m. my time. It is 8 a.m. New York time, and 5 a.m. Pacific time. So if you're in Pacific time, I am really sorry. Kayla, still can't hear you, man. At least I don't think we can. You may have to play around with the audio setting and choose the appropriate microphone. You can also just try calling in if you want. Either way is fine. Okay, let's see. Yeah, Kayla should be joining us in a little bit. She is messing around with GoToWebinar. She's not familiar with GoToWebinar all that much. And when we've traded in the past, and by past I mean last week, we usually do that in person. But since we're doing a webinar, we thought it would be better if we were not in the same room, because last week when we did a webinar together in the same room, my sound was coming across on hers, and her sound was coming across on mine. It was just this whole big to-do. So, all right. We're going to start off with the Euro-US dollar because that is my favorite vanilla pair. And let's see if I can get this one to be maximized. Let's see. Okay. Oh, look at that. That's pretty cool. Okay. Head and shoulder pattern. That was cool. And on this smarttrader.com, you can add these cool head and shoulder pattern things based. I mean, you can use an actual head and shoulder pattern tool thing. I don't know, something about just being able to put a really quick head and shoulder pattern or a really quick Fibonacci tool thing on there that just kind of warms the cockles of my soul. I don't know if that makes any sense or not, but they are still working out a few kinks in their system, so occasionally I have to switch back and forth to MetaTrader, which actually I'm going to look at MetaTrader right now, because right now I have a whole bunch of robots running on MetaTrader. Last week I took all of the robots off of my charts, and I slowly closed down most of the trades that I had running. I ended the week only having these two Australian dollar US dollar trades open, and they're still open, and they're going to be open for a little while yet. But then I added the Insanity robot to a whole slew of currency pairs, because it gets in and out of trades pretty quickly most of the time. And I made, ooh, wow, I didn't even realize I just made some more. What did I just make more money on? Well, look at that. Euro US dollar, Euro pound, Euro New Zealand dollar, and the Euro pound again. Wow, that's cool. So for those who know me, you know that I mostly do robotic trading. I don't do very much discretionary trading, because I am pretty lazy and I prefer just to have the robots running in the background. Look at that, the Australian dollar, Canadian dollar took a trade last night. That went pretty well too. Sweet. But that doesn't mean I don't know how to. Oh, you know what? You know what? This reminds me of. If you've ever seen the movie Quigley Down Under, at the very end of the movie, Alan Rickman. I think it's Alan Rickman. Yeah, he he gave. Let's see, man, now I got to remember his name. Tom Selleck. Yeah, he gave him a pistol and challenged him to a duel, and then Tom Selleck drew his pistol and shot all three of the bad guys really fast, and they all looked really surprised. And he went up to Alan Rickman, who was laying there on the ground, And he said, I never said, or I said I never had much use for one. Didn't say I didn't know how to use it or something like that. My favorite line of like any movie. It's kind of the same concept here. Just because I don't trade discretionary systems very often or very much or like at all most of the time, doesn't mean I don't know how to use them. I spent a lot of my morning focusing on the Euro US dollar, looking at some support and resistance levels and setting up some fib levels so that way I could do some appropriate technical analysis on the chart. I also went to FX Street's economic calendar to make sure I wasn't trying to plan out a trade on something that was about to, I don't know, take a dive, which would really, really, really suck. So this morning I focused a lot on the Euro US dollar. And let's see, usually whenever I start off with a currency pair, looking at a currency pair, and I apologize that we may not do much trading this particular webinar because I'm still working through some of these technical kinks with Kayla. It looks like it's still not working on her end, so we'll just keep focusing on my trading at the moment. All right, so usually I start off by going to a longer time frame, like a 4-hour chart. I don't go to the daily chart because whenever you go to a daily chart, it seems like it just goes back way, way too far, and I feel like you can get almost pretty much just as much out of a 4-hour chart. And I start looking for support and resistance levels that have not been hit again. So yeah, I could use, let's see here, grab a horizontal line, there we go. I could use this support and resistance level. It was a resistance level at this point. I'll even take it down just a little bit further. There we go. All right. And it was a pretty decent resistance line. And where'd it go? There it is. Okay, still here. We're good. It was a pretty good resistance line for a little while, and then it broke, and it just kept going for a little while. It might eventually be useful again, but at the moment, it's just, I don't like to clutter my charts with a whole bunch of stuff. I prefer to keep it as simple as possible. And so I'm using this this resistance line up here and this support line down here to draw my fib levels. So that way I can track where movement may or may not be heading. Zoom out again. There we go. All right. At the moment I'm in a buy trade, which actually is not that bad, but I am not liking that the market is actually looking more like it's trying to go back down. So the way that I feel about the market is that, let's see here. Oh. Hey, Kayla. Hello, Kayla. Sounds like you're opening a candy bar. Okay.
Les,
Hey.
can you hear me?
Yes, can you hear me?
Yes, sorry. That only took 10 minutes to figure out my volume.
Yeah, that's no problem. I understand. It happens to the best of us.
My bad. It worked last night, and then for some reason this morning it's not working. Of course, it's because my husband's asleep.
Yeah. Well, it's also GoToWebinar takes over your microphone. So occasionally, whenever it does that, it can screw up the settings that you already had going. Now that you've got the settings down, it should be fine, moving forward, but that happens. So.
Yes. All right, sorry, continue on.
All right, so I like to think of the market as telling a story. And in order to understand where the story is going, you have to understand where the story started. So I know it sounds a little bit cliche, but when you think of the market as two opposite sides playing, I don't know, tug of war, I suppose. They're playing tug of war. Then you think of it as one side is gaining ground against the other side. So a lot of the patterns that we look at in technical analysis are based around that, like head and shoulders patterns, like we just talked about. For instance, a head and shoulders pattern is showing that, let's see, we'll go over here back to this little head and shoulders pattern I had a couple of weeks ago. Not a couple of weeks ago, like a month ago. Wow, okay. So we see that, the market went up and we created a new high. We went up and it created a new high in comparison with this high, which was a new high in comparison with this high. And then it went back down. So when we think about it like a game of tug and war, the bulls are going up and the bears are going down. So bullish market is going up, bearish market is going down. So we see the bulls are taking over and they push past the previous two little highs. But then the bears take over and they pull it back down. And the bears go for one last push and they make it above that previous high that we just had. And the bears take it back down again. And for this particular head and shoulders pattern, it's not all that pretty. This head and shoulders pattern was not the most ideal, but it did work just fine. So the bears brought it back down and kept us down here for a little while, and the bears took us down here for a while. And the bulls rallied one last time but couldn't make it up to the previous high that they had just done, and that's when we saw it just tank. And it went down and down and down for, it was only like a day, but it was enough to actually legitimize, I suppose, this head and shoulders pattern. And whatever way you decide to trade a head and shoulders pattern, that's great and all, but I like to think more of the story behind it. So that game of tug and war that we talk about. That's also why I like to look at volume, which I don't have the volume indicator on my chart right now because I took it off before I started this webinar. Now I will put it back on again. Volume. There we go. So that's why I like looking at volume, because I think that volume tells what's happening behind the story. So, or behind the scenes, I suppose. So getting back to this head and shoulders pattern. Let's take a look at this head and shoulders pattern back here again. There we go. All right. Okay, so looking at this head and shoulders pattern, we see something going on with volume as well. Whenever we see a candle that is significantly larger than the candles around it, then we have to ask ourselves, what are we missing from the story? So in this case, we've got this big long candle here, and then we've got another big long candle here. All right, and yeah. I would really prefer that these lines stretched all the way down. I don't know why they don't, but oh well. Okay, this big candle right here did have a lot of volume in comparison to the candles around it. And then this next candle, which was the same size, had significantly less volume in it. And then we had another candle here, and it was not as big as these two candles previous, and the volume went down. And then we had another little candle here, and the volume went down again. And just bear with me, because I know that I'm stating the obvious here, because we can all see the chart, we can all see the volume, etc. But what I like to think about is more of the psychology part of this and what's going on behind the scenes. So if you think about, well, especially this candle right here, had a lot of volume, and yet it was not a full candle. It was, it was a big candle, had a big body on it, from open to close, it was a pretty big candle. It was bigger than a lot of the previous ones, but we also had a very large wick, meaning the bears were pushing back on this candle considerably. And volume is the indicator showing how many contracts, how many trades, just how much is going on within the candle. Not, it doesn't give you direction. It just gives you what all is going on, how many trades, etc. So when we think about it that way, and we're getting to why this is important. Oh, that's how we do that. Okay, I knew there was a way to do that. All right. So the bulls and the bears, they're playing tug of war within this candle. It's a 1-hour candle, so they had plenty of time to play tug of war. We had a lot of volume, meaning there were a lot of bulls and a lot of bears fighting on this candle. And it only produced half of a bullish candle, because the rest of this meant that the bears were pushing back down on this candle. And since there was a high volume on this, that means they were pushing pretty hard. So to me, that means that in the near future, the bulls are going to be pushing for the market to go back down. And we see that that actually did happen. We had a head and shoulder pattern. I don't know why these words are off. That's kind of weird. Anyways, we have a head and shoulders pattern, and it just legitimizes what's going on with volume and with the trend. Okay. The trend is up, by the way. We just corrected a little bit here. All right. I'm going to look for another example here. So that's a pretty good example. See, we've got more good examples of volume being an indication that the bears are trying to take back the market. They're trying to okay, this is odd. Now the candles just look funky. Why? What are these candles? Let's see. Something. Oh, those are Heikenashis. That's why that's so weird. All right. Candles. There we go. Cool. That is a lot better. That looks a lot better. Not for what I was talking about, but it does look a lot better. I was wondering why everything was overlapping so much. Whew. There we go. Hey, that's still a good head and shoulders pattern, though. And it still worked out. Okay. We are going to look at an example here really quickly, which is, there we go. All right. So in the middle, in this head part right here, we've got high volume on these candles. This candle was high volume, and the candle actually ended up being relatively large. Wow. It's very difficult to see now. I'm going to stretch this out just a tad. That way we can see what is going on here. Yeah, I'll probably have to play around with these a little bit more, because I don't know why it's not cooperating. Okay. We had a lot of volume on this candle. It was a very clearly bullish candle. And we had a lot of volume on this candle, but it was not so clear, because we have more wick even than we do body on this candle. The bulls and the bears were fighting big time on this candle. And then finally, on the next candle, the bears won out and pushed it back down. Although we saw a lot of movement, so we know that the bulls are still fighting. They're still in the game. And then we've got this next candle where we've got a lot of volume again, and about half of the candle is wick. And then we've got a very large volume on this candle and very small body. So we know that the bears may have won on this candle, but only by a little bit. It's more of a bullish candle, because the bulls pushed it back up after the bears were able to get it down. So Yeah. Anyways, we look at the story behind the movement and behind the candles to give us a little bit better picture of what's going on in the short term and in the long term. So short term, like in the 1 hour chart, if we look at a 1 hour candle or a series of 1 hour candles, we're not exactly looking at we're not going to be able to see an entire trend just from a handful of candles, but we can see a pretty good small movement before it gets ready to do so. So now we can actually take this over to looking at how this applies to our market conditions today. And let's take this. Okay. So first off, we have very obvious bullish candle, very obviously bullish because it's very large and the volume is very large and everything. So it's a very obvious candle. And then we still have a decent amount of volume, but the candle is pretty much nothing. And they call this a doji, I think, because it's got a lot of wick and a very, very, very tiny, little tiny body. And usually that is a signal of a correction or a reversal. And I don't really take these as a complete trend reversals by any way, shape, or form, but I do like to see them whenever I am considering a trade in the opposite direction or a counter trend trade. Okay, so right now I am in a buy trade, and it actually bought right there at that Fibonacci level, so I feel pretty good about the trade that the robot took, especially since it's at my little 23.6% fib level. Now this trade might still continue to go down, especially since it broke this fib level. It's probably going to try and reach down to the 38 fib level or even down to the 50% level. I hope it doesn't get all the way down to the 50% level because that means it's broken a new low and we're probably looking at going just a little bit lower. And yeah, that's pretty much all I have to say about the euro dollar. I don't really have any comment to make about the euro dollar at the moment until we see a little bit more movement. Especially, I'd like to see it break this low right here before I would place before I'd place a sell trade, or I'd like to see it correct and move back up past the 23.6 line before I'd consider before I start considering a buy trade. Although, again, I'm already in a buy trade, so that's not the most ideal. But this would actually create a fairly, I hate to say decent, because it's not actually all that decent, but it would be a reverse head and shoulders pattern, because we'd have a shoulder, and then we'd have a head, and then we'd have another shoulder, and then I could see it going back up to at least the zero line, I suppose, on the Fibonacci levels and such. Kayla, what have you been looking at this morning? Have you been looking at anything this morning?
I'm sorry. I just sneezed and I've been blowing my nose.
Oh, no
This
problem.
cold won't go away.
Yeah, I understand. We've all been in that situation before. Do you have anything going on in your neck of the woods with trading? I know.
No, not really. It's been a little um slowish.
Yeah.
Um,
Yeah,
I've just
I'd say yeah.
yeah,
Most of Kayla's trading takes place at night, not
yes.
necessarily in the morning. There are trades placed in the morning, but for the most part, we see a lot more trading with her in the Asian session than in the New York session. But uh, yeah,
And from last Wednesday to today, because the market's been closed and I don't trade on Fridays or Sundays. Yeah,
right.
not much has happened.
Yeah,
It's been kind of there. Um,
yeah.
no, I've just been watching what you do because I'm not too familiar with the head and shoulder pattern, so that was pretty cool to see.
Well, I'd probably say that a lot of people here would disagree that I'm not actually very familiar with it because the presentation was actually pretty terrible on that. I'm so much more used to presenting about robots, and so talking about discretionary systems kind of throws me for a loop occasionally. It's probably going to take me a few weeks before I actually start sounding like a, I don't know, any type of intelligence involved in that. See, now I can even form sentences. It's fantastic. All right. I also like the British pound New Zealand dollar. I like the British pound New Zealand dollar on robotic trades, especially counter trend trades, because as you can see, even when it's moving up or when it's moving down, we have a lot of correction and we have a lot of retracement that happens. The British pound New Zealand dollar moves quickly and it moves, very very large amounts, but for a counter trend system, it's just so perfect because man, just look at this. Whenever you're looking for a counter trend system, one thing that you want to look at in the currency pair that you are considering trading with a counter trend trading system, what you want to see is a lot of correction. So instead of just seeing big movements that just continue to go down or continue to go up and they just never seem to stop, you want to see, man, exactly what this British pound New Zealand dollar looks like. This is just fantastic. So even though it goes way up, it comes back down and it comes back down to this level. So if we think of this in a counter trend trading sense, counter trend trading would be like seeing this line up here, and this is actually basically the levels trader system, but we see we have a resistance line right there, and then when we break that resistance line, we actually sell rather than buy. Now that trade seems like it went really poorly because it would have been open from April 18th all the way over until like May 30th, so for like a month and a half. However, look at all of the opportunities for sell trades that we had going up. So as we were going up, yeah, sure, it would be great to say that we would buy at this level and then we would sell at this level, and we'd make money from that. But that's not really that's a difficult reality. It's difficult to say that we would buy at the lows and sell at the highs. So rather than trying to figure out where the lows would be or figure out where the best place to buy would be, a counter trend trading system gives you the opportunity, or I guess the laziness to I'm trying to think of a better word than opportunity or laziness, but I just can't. To not try and guess where the highs or the lows are going to be, but to trade against the prevailing trend. So selling here sounds like a bad idea, but if we also sell here or anywhere in between, and then maybe we also sell, let's see here. Let's see. Yeah, okay. Maybe we also sell here, and then we also sell, and I'm just picking highs and lows here that sorry, not highs and lows. I'm picking resistance levels because that's where counter trend trading system, my levels trader system actually would have placed trades. It places trades at resistance levels. Now, this would have been a resistance level, and it would have sold when it touched it again, and so we probably actually would have gotten out of that trade, and it would have made money down here anyways. But let's just say, for the sake of argument, that it kept going, and then let's say that we sold again here, and then we sold again there, which would have been, it would actually would have gotten in that trade here. Then we'd be able to ride those sell trades all the way down. And then we actually would be picking the highs. selling at the highs, and then we would have had all of these trades coming into profit as we went. This would have been an extraordinarily profitable trade. It may not seem like it would have been worth it to sit in a trade that went, let's see, very nearly 900 pips against you. Whoa, that's a lot of pips. But that's why we start with a very low trade size on the first trade, and we just incrementally go up in trade size. And so we'd be looking at a very large, I don't know, very large, but a decent sized drawdown by the time we got all the way up here. But then we would have been looking at this being the highest, the largest trade size up here, and then this being the smallest trade size down here. So if this was like a 1 micro lot trade down here at the bottom, then by the time it went 900 pips against you, that's $90, $90 drawdown. But then by the time we get up here, this might be a 1 mini lot trade, and that's $1 per pip. So by the time we come back down to this first one, that's $900. And then this trade right here seems like pretty much nothing at that point. So that's the beauty of a counter trend trading system, and it's why I like using robots rather than doing too much discretionary trading, because they don't have to sleep. And occasionally I do like to sleep. Okay, let's get back to the beginning here. That way we can actually take a look at some trades that might be opening up. So we're going to switch back to the 4-hour chart. And Kayla, you can chime in at any point if you see a trade opening up on the euro dollar or on any other currency pair that you're watching. So if you, yeah, don't be shy. I know I seem like I talk a lot, but that's only because I do talk a lot. Yeah. Oh, okay.
But it's okay because I feel like you have a wealth of knowledge. So it's good to hear your point of view.
Ah.
Yeah. Everyone has a different point of view, and I like to hear yours. So
that's nice of you, Kayla. But you know what? I like to hear your point of view too. And
well,
if you
yes,
if you have questions along the way too, I'm sure other people who are joining us might have the same question. Let's see. Isn't volume on Forex charts just tick volume, not trade volume? Certainly is on MT4. Yes. Yeah. So sorry if this question came through quite a bit earlier. Let's see here. 6:29. Not too bad. Okay, so it came in about 7 minutes ago. Volume on Forex is basically just tick volume. So it's not the size of the trade that counts, it's how you use it or whatever, I guess. No, that doesn't even make sense. Okay, let's bring volume back up because this is an important question and it's something I did not explain very well while I was talking about volume. This is basically just tick volume. So how many ticks, you know, I spent like 6 months in Arkansas when I was like 11. And I remember every time I walked outside, even just to go check the mail, I'd come back in and I'd check myself for ticks, and I'd have ticks everywhere. And even if I didn't walk past any plants or anything else, I'd be really cautious. I'd come back inside and I'd have a tick somewhere. It was terrible. But that's not the type of tick we're talking about. We're talking about ticks as in every single little tiny movement that the market makes. So tick volume would be how many ticks are taking place within a candle. Now, we don't actually see every single little tick. If you watch, like, because I've done this before, and it may sound like I get really bored and have nothing better to do, but I have watched volume on, let's see, let me bring it up on MetaTrader because that'll probably be a little bit easier to see. Go to the British Pound New Zealand Dollar, and we will put volume on, no, not that volume. That one's difficult to actually look at. I like using the indicator or the volume indicator instead because then I can associate or distinguish between the two a little bit better. When it's on the chart, then it's difficult to actually tell where the volume is at at any one particular time. So I'm going to zoom in just a little bit further because I know my screen is a little funky looking on a webinar. Okay, so back to what I was saying. I've actually just sat here and watched volume go as, make this bigger. No, that didn't work. That's weird. Oh, that's a level. Okay, we're gonna make this thicker. Let me see it a little bit better. There we go. Okay, I've watched volume as it's going, and how that relates to what the market's doing. And you know, we don't actually see, or I guess maybe we can't actually distinguish every single tick that's happening, because you'll see volume moving even when the market doesn't appear to be moving occasionally. So it's not, I don't know. I mean, see, we only saw this move a few ticks, and yet it's moved up like 40 ticks now. And man, it's actually moving pretty good now. That's pretty cool. But yeah, volume on the Forex market is just tick volume. It's just showing how many times anything is happening. So it's not showing the volume. Oh, man, volume is not showing the volume. Yeah, that was a smart one, Wes. It's not showing how large the trade sizes are because, I mean, let's be honest here. No one actually really knows, I suppose, how large all of the trade sizes would be, because this isn't just traders like us placing trades. This is stuff happening in economies. This is large amounts of exports and imports and all kinds of stuff happening across an economy. It's not just trades being placed. In fact, I'd say trades being placed is probably not a very, or at least trades being placed by retail traders like us is not even slightly a large part of what's going on here. So that's why when we talk about the tug of war between bulls and bears, it's not tug of war between me and one other person. We're talking about large, very large financial institutions or governments or economic news releases that move the market. We're not talking about me placing a one micro lot trade or something that makes it a tick. So volume is showing to me how much each side is willing to put into the fight. So again, back to the tug of war scenario, this would be like how many guys you've got pulling on your side, or guys or girls or whatever, you know, whoever it is you have playing tug of war. It's how many people you have on your side, how much they are pulling, and that's the story that we're seeing in the background. Because yeah, you know what, we will talk more about volume as we go along in these webinars. Today is not going to be specific. In fact, I'll probably end up just putting a lesson up about volume. That way I can express some of what I'm talking about a little bit better than what I am right now, because right now I am not expressing myself very well. But regardless, volume. I like looking at volume. I'm going to minimize this way down now. Okay. We're on the 4-hour British pound New Zealand dollar chart. For some reason it's trying to argue with me right now. And we are going to put some nice little support and resistance lines on here, because that is the very first thing that I like to do. It may not seem like it, but I actually really, really like support and resistance. I think it's fascinating where the market is moving, where it's been, where it's going, what people are thinking, and I don't know, how the currencies are interacting with each other. Like how the British pound is interacting with the New Zealand dollar, and then how the New Zealand dollar interacts with the U.S. dollar, and how the British pound interacts with the U.S. dollar. It's fascinating to me working with price patterns as opposed to working with indicators that other people have used, because really indicators that you put on the chart, like the stochastic or the RSI, those indicators are dealing with the same data that you are dealing with. It's just a different way of looking at the data that you're looking at. And I don't know. I prefer to look at the market in my own way and not depend on how other people have uh, decided to analyze the market. Sorry, I'm talking kind of slow. I'm determining where to put some of these support and resistance lines. Okay.
Wes,
This
can
should
I
be
ask you a
good.
question?
Yeah.
How far back do you like to look to put these support and resistant lines? Like, does
Well,
that make sense?
yeah, it does make sense. So,
Just like your personal opinion.
well, okay, so my personal opinion is wherever the market is at right now, that's where it's important to look at support and resistance. I mean, not right now in time, but right now in price. So if the price was down here at this support, or at this support line down here all the way at the bottom, then I would start looking at support lines further back in time, because I would need more areas to draw my lines. I mean, if we go above this line right here, like we went above this resistance line right here at this point, then we would have needed another resistance line, because now we're in a territory that's unknown. And so trying to find another resistance line, I don't even know if there is one. Ah, there we go. Okay, so another resistance line. Past that other one, shoot, I have no idea, because this is ugly. This is like way
Yeah.
ugly. This would not have been, yeah, I probably would have ignored that last resistance line and just used it as a resistance line, and then just, I don't know, at the very least, I would have used this previous support line that was broken as a resistance line. So let's go back to the beginning over here. So after it broke this line, I would have probably been trying to get to here. However, that being said, remember, if it goes above a resistance line or below a support line or whatever, and then it crosses immediately back into or back beyond that, then it's a fairly decent indication that that resistance line or that support line is not being broken by an advancing trend. It's just being tested by the bulls or by the bears, and then the bears immediately dropped it back below that previous resistance line. So in case that was really confusing, which it probably was, this was what we were looking at before right here.
Mm-hmm.
Let's see if I can find some sort of drawing of some kind. I wonder if there's like a circle. Ooh, a circle. Look at that. Okay. Oh, that circle's huge. Okay, how do I move it? There we go. All right. So this is the area that was previously a resistance area. And so we had a line drawn over here, and we saw that it just shot right above it. And actually, that's a fairly decent indication in of itself. If it shoots like really, really high above, and one of your support or resistance levels or whatever, then you should be a little bit leery about that type of candle, because it could just be the bulls. Sorry. Let me see. Let me try this one more time. If the candle is super large that breaks your support or resistance line, it could be an indication of just a very large movement that is going to correct before it actually continues. So looking at this candle, oh, geez, there we go. Okay. It had a very high volume, which means the bulls really pushed on this one. Like they pushed one really hard. And then we had even more volume on the next one, and it was a bearish candle that brought us back below the resistance line. Okay, there we go. Okay, we had even more volume on the bearish candle right next to it. And then we had even more volume on this bearish candle. And it doesn't really, it seems like it wouldn't make a whole lot of sense if what we were looking at was like if the volume indicator were showing like market direction, then this is counterintuitive, because we see that there is a very large bullish candle, and then not even, I mean, it's just slightly more than half the size, and it's a bearish candle, and then we had a very, very tiny bearish candle again, but the volume was going up. So that means they started fighting. The bears were fighting back on this candle, and they were fighting back even more on this candle. And given that it's such a small candle, that means they were fighting each other pretty hard. Like it was just moving up and down, up and down, up and down, up and down, up and down. And the bears kind of won, because the candle is technically bearish, but it's it's just not what we want to see. We don't want to see a candle that's so tiny with so much volume, because it means that now the bulls and the bears are fighting each other a lot harder. And now we've got a doji candle, and then we've got another bearish candle that is much smaller in volume. And what we're trying to create here is a narrative of events, what's going on in the market, with the bulls and the bears. So when you create a story, it makes it a little bit easier to understand. Now, this resistance line over here that was broken and then it was immediately taken back under, we're actually hitting that resistance line several more times. So you could even say that we could take this and we could just say that it's not relevant. This move right here maybe was not relevant because it immediately dropped back below, and we're still testing this previous resistance line. So that is pretty cool. But that's also why I like using the levels trader system or a counter trend trading system, because then we would have been just selling and then maybe selling again inside of this 4-hour candle, and then when it comes back down, then we take profit, and it just feels awesome. But you notice that after it broke and it came back down below this resistance level, it came back down and it touched this previous resistance level, which is now a support level. Pretty cool, right? The resistance level was touched. Like we had this, we drew this line based on this little section of candles here. It broke it, came immediately back down below it, tested that resistance level again, came back up, tested that resistance level again, and then it finally broke the resistance level, and then it broke the next resistance level, and then it came immediately back down, and then that resistance level from way back here became our support, because it was tested quite a few times. So we kind of consider that a more relevant level at that point, because it's been tested so many times. So that also would have been a pretty good trade when it came up and then it came back down and broke this level, trading it down to this previous resistance level that we had that became a support level. But hindsight is 2020. I don't really watch the 4-hour charts for trades. I just watch them for support and resistance levels and those purposes. Let's drag that down just a little bit lower, and let's go ahead and draw another horizontal line. That way we can shrink back down to the 1-hour chart. Yeah, see, we're about to break that previous resistance line again. That is pretty cool. Okay, but I'd like to put some Fibonacci levels on here just so that we can feel a little bit better about some of these lines. This one right here isn't too bad, but I don't like it. I don't like it because it's been crossed and it just, these two levels here were really the only times that it was tested. And yeah, let's see. Take that one out. And this level was tested quite a few times, as we saw already, because it was a resistance line and then it became a support and then resistance again, and then a support. I'm going to leave that line in place for right now. And let's draw our Fibonacci levels from this low, because it's been touched a few times, up to this, you know what, up to this level right here, because I like that level. It's been fun. And this MTI Fibonacci thing kind of extends it past that. So it's not just retracements, it's also levels moving forward. Okay, there we go. And you know, let's see. Since I like that line so much, yeah. All right, there we go. We'll do that. Okay. Since I like, well, let's move that. Okay. Since I like this line more because it's been touched once and then now the market's been kind of hovering around this line right here, I used it as the ending place for this Fibonacci level. And then you can see that it went a little bit past that Fibonacci level and went all the way up to whatever 1.18 is. I'm still trying to learn what the rest of these are with MTI. This is just extending it past the retracement levels, basically flopping the retracement on top of itself. So we did make it up to there, and we came back down, and we made it down to that same really cool line that I really liked from before. All right. And that one's fun, but that one's not what I wanted. All right. So for the moment, you know, we're still making new highs and we're still making higher lows as well. But I still don't feel very comfortable with this being a buy trade, just because we've had so much movement like that in the past. Oh, look, a head and shoulders pattern. Did I see that? I don't even know if I saw that one before. Oops. Yeah, that's nice. Okay. Sorry, still trying to look at the, still trying to form a narrative here of what's going on with the British pound, New Zealand dollar, because we're kind of at a critical part here, if you notice, because there we go. Because we're at this previous support and resistance line right here, and we're touching it again. So yeah, this is the part that always gets me, is what do you do when you get back to that support or resistance line? Do we trade back down to this one, or like do we keep trading within this channel? And what I would really like to see is it break. I'm going to get rid of this Fibonacci level now, because we know that the next fib level going up is right there. So I'd really like to see it break this line. And if it can't break it, I'm probably just going to sell back down to this previous support line and actually a little bit above it. We're going to take this up to the body of that candle. Yeah. Uh, but I would probably be getting out of that trade pretty quickly if I do take a sell on that, especially if we break this line. And I would put a stop loss. You know what? I'm actually going to take this trade. I like this trade. I'm going to go ahead and sell this. And then it's going to be completely unreasonable because it's just going to go up to this previous line. Let's see. Ooh. Wait. I think I actually see something else in this now. Possibly, potentially. Well, let's see here. Really low volume doji. High volume. Yeah, you know what? Sell trade. I'm going to do this. I'm going to do a sell trade on this one. Let's see. How do I do that? There we go. Sell. And I'm not going to do a one mini lot trade. I'm going to do 5 micro lot trades. About 50 cents per pip. I'm going to sell it. Oh, it sold it right away. Okay, that's cool. Let me go ahead and put a. Actually, I'm going to go ahead and take the robot off of the British pound New Zealand dollar so that it doesn't try and manage that trade. That'd be terrible. And we want to put the take profit, edit. Let's see. I'm going to put the stop loss at this line, 1.95. 95. And I'm going to put the profit target at 1.934. I'm going to do 1.935. I know it's only a difference of 1 pip, but that pip really means a lot to me. So I'm going to go with that. No, you know what? Yeah. No, that's the difference of 10 pips. Oh, yeah. Okay. 10 pips. That makes more sense. That 10 pips is important. Okay. So I've got my little sell trade going. And just for the sake of irony and everything else, this trade's probably going to go horribly wrong because it's the first trade ever placed in my live trading room, and it's just going to hurt. But this is my live trading account, so I'm not just I'm not messing around here. We're looking at real money that's being gained or lost. This was the one trade that I'm placing during this webinar because we've already been going for an hour now. And unless you've seen anything else, Kayla, I'm going to go ahead and stop the recording.